Welcome to the Think Small podcast, hypergrowth for small businesses. So, what's slowing you down?
Hi again, everybody. This is Rob Godlewski with the Think Small podcast. And today our guest is Jim Donnelly. Jim is the president and CEO of Wayne Bank. Wayne is a regional bank with offices in Western Pennsylvania and New York State. Jim, thanks so much for joining us on the Think Small podcast today.
Thank you, Rob. I'm really glad to join you here today.
So Jim, first of all, tell me about your journey through, into professional banking, and then finally, how did you get to Wayne Bank, and tell me about the services and solutions that you offer your customers and clients at Wayne Bank.
Thank you, Rob. It's the journey was not a straight line. I didn't endeavor when I was growing up. I wasn't walking around with a little pencil protector in my pocket, hoping to be a banker someday, but only because I didn't really know what bankers did. And so as I went through college and I've got a job in a community, the company I worked for failed, and I was thinking, what do I do next in my early 20s? And somebody in Rotary said, hey, we have a management training program that I think you'd be perfect for. And so I spent the time going and learning a little bit more about what it could lead to. And I got pretty excited about the opportunity to join banking, right? Because before that, I had only dealt with the tellers and a new accounts person, and they looked like great jobs, but I didn't know that I was really wired for it, right?
Okay.
And then when I went through the management training program, I got exposed to a lot of different pieces of banking, and it kind of lit me up and excited me about being able to help people achieve their dreams and to help guide them on the financial side of what their dream is, to how to achieve it. And so it was.
So it's more the helping people that really set the hook in you then, right?
Yeah, it was the helping people. And then when I got into commercial lending, you are sitting there with somebody and they're looking at a blank canvas and telling you what could be there. They're looking at a field and saying, I'm going to build a building there and I'm going to make widget X there. And here's how I'm going to do it. And here's what my thought is. And here's my business plan. And you're like, I didn't look at that field and see that. It's exciting to see the world through somebody else's eyes and then help them achieve that. So it's helping them, but it's also working with somebody who has a vision and creativity to create something that doesn't exist or change a process or a product that does exist into making it better.
Excellent. So what finally got you to Wayne Bank?
I'd been active in banking associations and other things. And so there was a couple of recruiters who had my name on their list, and they would call occasionally, and we'd have good conversations. But when I got the call about Wayne Bank, it was a really nice bank in Northeast Pennsylvania, upstate New York, really well run, good owned, good board. And so my wife and I went and explored the area. It's beautiful. We love it. And so we were able to make the transition well from a family standpoint. My sons had all launched and were doing their thing. And so for my wife and I, it was like a good new adventure. And for me, from a career standpoint, was I ready for what was next? I thought so. The recruiter thought so. And the board at Wayne Bank thought so. And 4 years in, I'd say it's going pretty well.
Oh, so you joined relatively recently, just
4
years. Okay. But the bank has a long history. I saw on your website that it was founded in, what was it, 1871, I believe?
Exactly, 1871. So when I talked to people and they were like, well, during COVID, it must have been really trying. I'm like, you realize that wasn't even the first pandemic the bank had been through. And you start talking about the history of how the bank started and where we helped people through the Depression. We helped people through Great Recession. We went through the Spanish flu. We went through COVID. We've helped our communities survive and thrive through some of the most challenging times in our country's history.
I can honestly say that you're the first guest of this podcast that say that COVID in 2020 wasn't even your first global pandemic. That's incredible. But it really is a testament to the longevity and the services and the problems you're solving for your customers. So that's incredible. So you've been there since 2021 or 2022 or so, relatively recently.
Yeah.
But
Yep.
I know you know a lot of the history of the bank itself. What in those times of challenging times, right? When people are pulling back their money or not making those extra investments and not looking for you for growth, but looking to kind of, curl up and hide in a shell. How do you and how does the bank manage itself through those times of contracting revenue?
So in 2023, SVB Bank and Signature Bank both failed. Anytime a bank fails, the FDIC has to take it over. In 24, maybe it was, but it sends a little shockwave out. People worry about it. So the first thing is get our team together and say, all right, this has happened. This is what our customers are worried about. Here's where we are. We are not in their situation. We're strong, we're stable, we have good capital, good liquidity, we're in good shape. Now, first get your team settled. Now, what are the strategies we can do to give our customers that confidence that they're looking? And so we had some larger depositors who were a little concerned and were calling. And so I took upon myself to call the top 20 clients that were calling and saying, all right, here's the president and CEO of the bank. I'll walk you through our financials. It's all public, but ask me the uncomfortable questions. Ask me what you need to know. And I'd say for most of them, we gave them the confidence to stick with us as we went through. We also came up with solutions that would give them confidence and make their deposits safe, even if there were trouble. And so you kind of figure out, what do you need to do internally? Take a minute, come up with your strategy, pause, exhale, and then go talk to the customers. Don't react out of the fear, but don't hide from it. It's I think being transparent and direct always works.
That's wise advice. So it's interesting to me that in your area of work that having two competitors shut their doors is usually a time for celebration, right? But it really became a time of, oh no, could we be next? And you really had to rally not only your troops but your customers around that. Most companies wouldn't have the same feeling about a couple competitors closing their doors. So it's a very interesting.
I mean, they weren't
dynamic there.
Yeah, absolutely, and they weren't direct competitors, but the industry kind of rides together. And so, early in my career, when I saw one of our competitors had some bad news on the front page of the newspaper, and I brought it into my boss and I said, "Ha, our major competitor," and he's like, "It could be us on the front page tomorrow, right? Things go wrong. Don't celebrate the downfall of your competitor. We want a healthy industry." And so in Honesdale, we have 3 banks that are headquartered in a relatively small town. And one of the things we did during that time as well was we put out a joint letter from the 3 banks saying all 3 of us are in good shape, right? I had people call me worried about a competitor, and I would look up their financials and say, look, I just looked at them. I don't see the problems in there. I'd love to have your business. And if you want to bring it over, I do. But I don't want to take cheap shots or be, a poor competitor. I want to win you over because we've done something right, not because they've done something wrong.
Right. So Jim, then let's talk about hopefully that you're going through a time of growth right now, but tell us a time of leading the business through a period of growth, because as we know, growth brings up a whole different set of challenges and not only for customer staying with the customers, but from an internal standpoint too, from an employee standpoint. Tell us how you navigated the bank through that.
So in the 4 years I've been here, we've grown organically about $450 million, which is pretty good growth on a consistent year after year basis, even in tougher markets, right? So,
and that's assets under management.
Assets, correct? Yeah, that's our assets, yeah. And so,
yeah,
and that was prior to acquiring them, right? So what we did then, we started off from the basics, and we said, all right, let's do customer journey mapping for each of our product sets, and how do we take what's the customer doing at each piece of the process that we're going through, and what are the employees doing, and where are the gaps in communication? How do we do this better? And what are the things that are left in the system because we've always done it that way that we really don't need to do anymore? So we try to streamline that, improve communication. and put people in the right positions. So we had some people in sales positions that really were uncomfortable in offering solutions to our customers on a regular basis. They would be more reactive than proactive, but they were really good at some other part of the job. So we try to move people around into those positions, and then kind of got some rallying cries around what's important to do. Be that trusted advisor, make sure we're offering solutions and let people know that we have the capacity to do it, and make it easy for them. And so we started off, and that flywheel started to turn. And last year we had really good growth on our deposit side and on our loan side. And I think it was, what do they say? It's an overnight success, 4 years in the making. But we really
Right.
set the processes and procedures up so that we could do it. We fixed some technology in a couple of places that were holding us back. And we continue to look at how do we take technology so it aids us in taking care of our customers and our community, as opposed to just it's a cool thing to do, right? So we kind of went through that process. And then about in July of last year, we announced a merger or acquisition of Presence Bank, which is in kind of more southeast and south central Pennsylvania. And they were about $450 million in assets, but a really strong team, great credit metrics, similar culture for how do we take care of customers. And Janak, who was the president of Presence Bank and is now my chief operating officer, we started having serious conversations about how do we bring these two good organizations together to broaden our reach. How do we enhance what they're able to offer their customers because we're a little bit bigger? And what are the cool cultural things that they're doing that we could adopt to help take us to the next level as well? So we try to shuffle the deck rather than say, we're the bigger bank, do it our way. We try to figure out what are the things done that really well at each institution, that if you take the best from each, how do you get a better bank in the end?
Right. That's a wise approach for integrating an acquisition, right? Not forcing your will and your brand and your products upon the newly acquired business, but seeing if there's a better third right answer out there to offer to your now combined set of customers. So you hit on two things, Jim, that I really kind of want to dig into a little bit. First of all, your exercise in customer journey mapping is spot on. There's not a lot of businesses who take the time to understand where the customer touches your business and how they can expand, how you can expand your services and offerings to those customers. Because we all know that the easiest place to get growth is from your existing customers. It's a lot harder to go find new customers. So I certainly applaud you on that. What were some of the new offerings or new methods to go sell new products and services to your existing customers? What were some of those?
Some of it is just knowing your customer. And let's take mortgage for an instance, right? It's a complex product. People maybe do that a few times in their life, so you don't really get good at it. And it's a long process with a lot of components where the lawyers are playing a part. There's an appraiser, there's a sales contract, and you usually have
title companies.
Yeah. So there's a lot of partners involved, and you can get very internally focused on how do I deliver it and forget that to your consumer who you're serving, that it seems like there are dark periods where there's no conversation. They don't know what's really going on, and we'll update them when the appraisal comes in that everything's okay. We'll update them the title came in okay. But what happens in between there? And for a lot of us, it's you start to scratch your head and worry. Well, what if this doesn't work? So we started filling it in with conversations, and so we matched up. That's one of the places, matching up technology with a good lender. So there is a communication platform back and forth, so the customer can go in and see exactly where they are in the process and what's next and what are we waiting for. And there's also an ability to contact that mortgage person either through the chat function in that application or to call them on their cell phone and say, hey, I'm worried, where are we at? And so we try to keep it all lit up so the consumer knows where they're at and that progress is being made and things are on time and will be on pace. And then our staff will also look at this, maybe take a day or two more than people expected. Let me reach out and say, don't worry about it. I talked to the appraiser. We're going to have it back a day later. So when you're doing all that, you're building a relationship and you're helping them get into their dream home or their next home or their first home. And while you're doing that, you have conversations about what else can we help you, right? And frequently they'll say, well, I really have X, Y, or Z I need some help with, or I'm thinking about a car. Or you start getting into more of a relationship of where you can take it. And that journey mapping is you're walking with the client through the process, as opposed to, being a nameless, faceless person on the other side of a computer screen. And so that journey mapping for us was really to help us recognize those times where it's not a great experience for the customer and do what we can do to improve it. But also, how do we streamline it and make it better from an overall process so it's more efficient on our side and a better experience for a customer. So, you don't want them saying, would you rather get a root canal or go apply for a mortgage? And they say, I'd rather get a root canal.
I think I'm good with the mortgages, actually, Jim. But that's just me. That's a great way to approach it, right? Be solid in one thing, and then kind of like the land and expand methodology for getting new business with your existing clients and customers. The second thing you mentioned was technology, and I think every CEO I'm talking to on this podcast is mentioning technology, especially AI, and its impact or potential impact on their business. So before I tell you the themes and the trends going on in other conversations, tell me about your approach with AI in the business.
So probably 6 months ago, we brought into our senior leadership group, we demonstrated some of the power of AI, right? So we took, and it was the AI that's in our environment. So all of the customer information is secure. It's not for public consumption. A lot of the AI models that are out, whatever you put in becomes public, right? So we're able to keeping this in our contained. So we dropped in financials and asked it to spread it and come up with ratios, and then to go out to public sources and pull in a credit memo on this particular industry and write it. And so, boom, seconds, it has something that my team would probably work on for a day or two on typing in the spreads, doing the math on it, and then creating a credit memo about that client versus and how they do compared to the industry. Then we asked AI to show us its math, show it the work. And so it came out and showed all of the math behind it. And then we said, show us the sources that you used for the credit memo. And 2 of the 5 sources it tapped were not credible, right? So what you got to remember in using AI is it's like a brilliant 4-year-old, right? It can go anywhere and do anything, but it doesn't always know the difference between legitimate sources and illegitimate sources until you teach.
Right.
So then we said, okay, remove any reference from those 2 sources and redo the memo. Boom, instant, right? So what are we doing? We're showing how do you do prompting for an AI exercise, and how do we learn to use the tool better? So now we have all of our senior folks. We're saying, okay, you're writing memos, you're writing articles, you're writing emails. Use the tool before we embed it into everything, and we're asking everyone else to do it. So the way I'm looking at it was back 20 or 30 years ago, there was a reinventing government move where they were trying to get people to use technology. And there was a governor in the state of Maine who was talking to somebody who had recipe cards that they were actually looking at voter information on. They said, you could put that all in a spreadsheet and run that more carefully. And the woman's response to the governor was, yes, but then I wouldn't have a job. So I feel there's a little bit of that going on with AI, that we're afraid it's going to take a job, so I won't adopt it. The way I'm looking at it, we're saying is we're going to go from using the black pen and creating to using the red pen and fixing, right? So it's a tool that will help us be more efficient and effective. And it's not one tool for everything. It's creating the agent that does the task that you need it to, so it's your assistant. And how do we make our work more productive, more creative? And we're easing into it. There are some easy places like search in our policy. If you have a question, having that AI agent answer it instantaneously helps our employees help our customers faster. And eventually, if right now a credit analyst can do 1 to 3 complex credits a week on the commercial lending side, maybe they can do 5 to 10. So we could speed up the process for our customers and have our employees be more productive and do less of the grunt work of entering the data into a spreadsheet to calculate, and more of the analyzing that which comes out, or making sure that AI did the math right, and doing so. And those AI agents, that if you have a dialogue with it, it'll get better and better as it goes. So I'm not sure where it takes us all the way, but I'm pretty optimistic in the next, foreseeable future. It's going to make us more productive and help us take better care of our customers going forward, and make our employees enjoy their work more, because we're going to take some of the work that is less enjoyable out of the work and put the stuff that is more enjoyable onto the plate.
And I'm from that statement, I'm assuming that the stuff that's more enjoyable is actually that human to human customer contact. So
human
AI is
analytical, analyzing the data, understanding it, thinking about what is this telling us, and do we understand where it's going, and be able to convey that to the human on the other end.
Right. One thing I'm impressed by in the approach you're taking is you're getting your executive leadership team on board with AI before you deploy it to the whole organization. So you're going to have a leadership team that your people can come to for answers and trust. And I also like your approach in validating the answers that come out of AI, because as I've seen in my work with my clients, you absolutely have to pressure test the answers coming out of AI. They need to be validated. They need to be confirmed. I love your approach about show me your work, show me your sources. But yes, speed and efficiency are key benefits to all of this. Go ahead.
Absolutely. And, the hallucinations on the earlier, AI agents that came out that would say crazy things or read things that were, on a fringe of society as, this is the way you should do it. And AI also doesn't know what it doesn't know, right? It consumes a lot of data. And so it has a lot of stuff in there. But I was talking to someone yesterday about it, and they were saying they were able to confuse an AI agent by having a glass and saying it's half full of water and talk about how much room there was in the glass. And then they dumped the water out and put the glass upside down. And the AI agent said, that glass is now useless because you can't put water in it. You should get rid of it, right? And because nobody had taught it that you can flip it back over and fill it back up.
Oh my gosh, yes.
Right? So assuming that it has all of the answers is incorrect, but assuming it has none of the answers is also incorrect. It's being able to have the conversation. My CFO was flying through an airport. The flights were delayed. So he got on with his AI agent and said, my flight delayed. There's another flight that's 10 minutes later. Both flights are going to the same airport. Should I switch flights? And in the conversation, the AI agent said, you're on the larger plane. It'll be given priority at the airport that it's coming into. And you're better off staying on the plane you're on than hopping to the other flight. If one of the two is going to be canceled, it's probably the smaller, later flight. And he wound up getting home an hour and a half late because of the delay, but he got home. And the AI agent didn't have any special knowledge. The airline was not communicating with the chat. It was taking the known information and applying it to the situation. It didn't mean it was right, but it had information about priority of the flights. and because of the size of the plane and the number of passengers that my CFO didn't have, right? So he was able to make a better decision. Didn't mean it was the right one, but he was better informed about which plane should I try to get on.
Interesting. So it helped a human make a better decision. And that's really
And
what
he had a chat with it.
Right.
He's sitting in the airport talking to an AI agent as if it were a human, and they're having a conversation going through the logical progression of how to make a decision. That's a good use.
It's absolutely a good use. And he made the right decision.
Yeah.
So
he's a pretty bright guy. He usually does, but he had some help.
So the good news is I'm having this conversation almost every CEO that I speak to for this podcast, and they're all coming to the same conclusion, that it is AI is a tool. It's not the end solution. It's not, and they're not using it, or they're not looking at it to replace or to eliminate headcount. They're looking at it to improve the efficiency and the effectiveness of your existing headcount. It's a tool to make your employees better, not to make your employees redundant and expendable. And even companies that are employing AI from a IT and a technology standpoint are focusing their efforts more and more on the human interaction of their business and employing AI to support that, not to replace it. So you basically supported every other conversation I'm having around this subject, which I think is adds a little inspiration to all of us, right? It's not what you hear on the news every day. The news likes to over sensationalize the negative aspects of whatever news they're talking about. And I ultimately think that AI is going to add in a net addition of new jobs. We just don't know what those jobs are yet. And I think that's super exciting.
I have a son who will be defending his PhD this month and graduating and going to work in the AI field from an academic standpoint. So he dumbs down a lot of the conversations. But the side he's working on, he's doing his research that he's been working on has been all medical, right? So we're thinking financial, but the benefits to a lot of other things. So one of the first things that the group he worked in, he was a lead investigator on, was they took a particular type of breast cancer, and they worked with Mass General and Duke Medical, and they took like 100,000 mammograms from a particular type of breast cancer and ran it through their AI agent. And the way he described it is AI could see everything, but it doesn't know what's important and what it sees, so you have to teach it. And as they did the learning model, they were able to take the doctors of those 100,000 and feed it into the model and identify the tumor 3 to 5 years sooner, which the way the study came out would increase the survivability of those cancer patients, right? And I'm like, oh my God, you're brilliant. You're going to, because you're a proud parent, you're going to cure cancer. He's like, Dad, there are tens of thousands of these types of studies occurring right now in different research universities around the country. There's going to be major move forward with heart disease, lung disease, breast cancer, and the health of our population will increase, not because AI is solving it, it's because instead of the doctor who's reading a breast cancer, a mammogram right now and noticing the tumor can now get, instead of 1 second opinion, they can get 100,000 or 500,000, however many of those have gone through the model, that will now help the doctor identify that tumor sooner. So it doesn't replace the doctor, but it's a tool for the doctor to see things a little sooner and help it. So I like the way he kind of described that. Now, what can we do in my company that's as impactful as that on somebody's finances is going to be exciting to identify, right? So I think the upside for how we live, how efficient we are, will be there. There will be new jobs. But there also may be a different work week. There's a lot that will change. It's an industrial revolution where we work 7 days a week and 12 hours a day. And if you were old enough to stand up, you could work in the mill. Well, we don't have kids working in the mill anymore, and we don't have people working so there were changes that people feared when the industrial revolution came in. that would say have given us a better work-life balance, and that we may be headed in that direction again. But it's going to unfold, and I'm not Pollyanna, so I know there'll be some negative components to it, and we have to be aware of those. But I do think there's potential for some great good, but we have to keep the ethical boundaries around it, and we have to be eyes wide open on what the positives and negatives are.
So that leads us to my kind of wrap up question, and that is, what does the future look like for Wayne Bank? What does the next 3 to 5 years look like? You said you made one acquisition that seems to be very successful. Are more acquisitions on the table, or where do you see your growth coming from in the next 3 to 5 years?
I think continuing to do organic growth, serve our communities and our customers, will continue to give us opportunities to grow. And with the Presence Bank, Wayne Bank, and we trade under Norwood Financial. So our stock symbol, if anybody was looking, is NWFL, and we trade on the NASDAQ. If we have cultural fit like we did with Presence Bank, and we think we can better serve our customers and create more opportunities for our employees by the growth, then we'll look for other like-minded organizations to join together. But acquisition for acquisition's sake doesn't always work out as well as this one is. But a lot of it is because we have great people. We viewed our customers and our communities the same way, and we produce good results so our shareholders benefit. And so I think there's lots of opportunities for us for growth and for profitable growth in the next 3 to 5 years. We have a great management team, and we have stratified in age groups. So as one group hits that age where they may want to hang up their cleats and do a retirement, we have the next group ready to move in. So I'm very bullish on what's the future for our bank.
I love that. I love that approach, and I'm happy that you are. I'm happy that you're happy about your future with Wayne Bank. What would be holding you back from achieving those growth goals?
Oh, the environment could change. Right now we're in the Persian Gulf and having a major conflict. The world is unsettled with Russia and Ukraine. And so there are other things that are outside of our control that could affect our economy. I was reading something this morning that the Canadian unemployment rate is starting to look recessionary. Are there things out there that will change? Our economy looks pretty good. A bunch of numbers came out this morning. Inflation is down, but the growth isn't as robust as we thought. So read the tea leaves and tell me what it says, and I could tell you what we'll do. But I think the rest of this year looks pretty good. But it's hard to look at maybe the last quarter of this year going into next year and feel certain about the direction. So that could do it. But I still think we'll grow. I still think we'll serve our communities. And like I said, we've been around 155 years through a lot of twists and turns, and have been able to serve our communities and grow while doing so.
Excellent. So, Jim, any last thoughts for our podcast audience? Again, small to mid-sized business leaders to part with them as they start their journeys of growth in the next 3 to 5 years?
I think have a good idea, a good understanding of who you are and who you are. Don't chase the shiny new things. Lean in and do a better job. Never be satisfied with how well you're doing, because there's always a way to do it better. It's turn that Rubik's Cube around and look at the other side. See if you've solved for it in different ways. Ask people who don't know you to kind of just think through and ask you the simple questions. Because sometimes when you know too much, you step over the easy solutions, and somebody who doesn't understand your industry asks you a question, you go, could we always done it like that? Oh my goodness, that's a terrible answer. How could we do it? And then when we put new technology in place, what I describe as, don't buy the Porsche and put the Jeep tires on it, right? So if you're going to get new technology, do the new procedures and processes around it so you can maximize the new tool. Don't take the old policies and procedures and lay them on top of the new technology and say, I don't know why we bought this. It's not working. when really all you did was put something that inhibited it from maximizing. And most importantly, pay attention to your employees. Make sure they understand how to serve a customer. Get excited about being at work. Create a work environment they want to come to. And my dream is when we do that really well, we're not going to have employees saying TGIF, thank God it's Friday. They're going to be saying TGIM, thank God it's Monday because I get to come back to work. That's what we're going to have on our T-shirts in a couple of days.
Jim, I love that vision for you. And boy, I wish we could get that vision across to every worker. Jim Donnelly, President and CEO of Wayne Bank. Thank you so much for joining us today on the Think Small podcast. We appreciate your time.
Thank you, Rob.
Welcome to the Think Small podcast, hypergrowth for small businesses. So, what's slowing you down?